Hello everyone, welcome back to holdinmarket. I am Shovik and today in this video we are going to deep dive into an exciting topic, the best multi/flexi cap fund for the year 2025. So in this video I will be discussing the top 5 flexi/multi cap fund for the year 2025 and will also reveal my best fund pick based on my understanding and risk appetite. So without wasting any time, let's get started with the video, guys. So the first checklist that we're going to discuss in this video is ratings. Ratings are basically a report card for any mutual fund. It helps investors to track the fund performance compared to its peers. If a fund has a higher rating, it generally means that the fund is performing better in the market compared to its peers. Also, the fund has a lower risk and higher return giving capacity in the market. So always look for a higher rating in any mutual fund. So this is the first checklist that we just discussed in this video. So here the fund that has scored the top score is Parag Flexi Cap Fund Direct Growth. So the second checklist that we're gonna discuss in this video is CAGR, Compounded Annual Growth Rate. CAGR shows the average annual growth rate of an investment over a specific period. In simple terms, CAGR helps us to understand how much your investment has grown each year on an average. So this is the second checklist. So here the fund that has scored the top score is JM Flexi Cap Fund Direct Growth. So the third checklist that we're gonna discuss in this video is Alpha. Alpha measures the fund performance compared to its benchmark index, say for example Nifty 50 or Sensex. If a fund has a higher alpha, it generally means that the fund has outperformed its benchmark index, whereas if a fund has a lower alpha, it means that the fund has underperformed its benchmark index. So alpha is an important measure to track the fund's manager's performance, how much your fund manager is adding value to your mutual fund. So always check alpha while tracking any mutual fund. So this is the third checklist, alpha. So positive alpha indicates the fund has performed better than the benchmark index, whereas negative alpha indicates the fund has performed worse than the benchmark index. So here the fund that has scored the top score is JM Flexi Cap Fund Direct Growth. So the next checklist is beta. Beta measures the fund's volatility compared to the market. If a fund has a beta equal to 1, it means that the fund price move in line with the market. If a fund has a beta more than 1, it means that the fund is more volatile. Whereas if a fund has a beta less than 1, it means the fund is less volatile. So for a conservative investor, we should look for a beta equal to 1 or beta less than 1. So this is the next checklist. So here the fund that has scored the top score is Edelweiss Flexi Cap Fund Direct Growth, Franklin India Flexi Cap Fund Direct Growth, HSBC Flexi Cap Fund Direct Growth, Invesco India Multi Cap Fund Direct Growth. So this 4 fund has scored the top score here. So the next checklist is Sharpe ratio. Sharpe ratio evaluates your fund risk adjusted return. It tells how much return you are getting for per unit of risk that you are taking in the market. If a fund has a higher Sharpe ratio, it means that the fund is giving better risk adjusted return. So we should look for a higher Sharpe ratio while evaluating any mutual fund. So the next checklist is Sharpe ratio. So here the fund that has scored the top score is Parag Flexi Cap Fund Direct Growth. So higher Sharpe ratio indicates the better risk adjusted return, whereas lower Sharpe ratio indicates poorer risk adjusted return. So always look for a higher Sharpe ratio fund. So the next checklist is Sortino ratio. Sortino ratio is similar to Sharpe ratio, but it mainly focuses on the downside risk of the market. If a fund has a high Sortino ratio, it means that the fund will perform good in the bear market, also when there is a market volatility. So for a conservative investor, we should always choose for a higher Sortino ratio fund as it will perform good in the bear market. So always look for a fund having a higher Sortino ratio. So this is the next checklist, Sortino ratio. Sortino ratio measures the risk adjusted return focusing on the downside risks of the market. So higher the return, higher the ratio, the better the return it provides. So here the fund that has scored the top score is JM Flexi Cap Fund Direct Growth. So the next checklist is Trainor ratio. Trainor ratio evaluates the fund's risk-adjusted return compared to the market risk. If a fund has a higher Trainor ratio, it means that the fund will perform better. This is the next checklist, Trainor ratio. Trainor ratio measures the risk-adjusted return, focusing on systematic risks, market-related risks, and not the total risks. Higher the ratio, the better it is. So here the fund that has scored the top score is JM Flexi Cap Fund Direct Growth. So the next and the last checklist is standard deviation. Standard deviation shows the change in fund returns from its average return. If a fund has a higher standard deviation, it means that the fund is more volatile. Whereas if a fund has a less standard deviation, it means that the fund is having more stable or good returns. So standard deviation is an important measure while identifying any mutual fund. So the next checklist is standard deviation. Standard deviation measures the volatility of risk associated with the fund's return. Lower the ratio, the better it is. So here the fund that has scored the top score is Parag Parekh Flexi Cap Fund Direct Growth. So an important note, whether to choose a direct plan or a regular plan. Always choose a direct plan over a regular plan, as because a direct plan will have a lower expense ratio. Also, it will increase the chance of better returns against a regular plan. So from my end, always choose a direct plan, as because if you are tracking the funds by yourself only, you should always choose a direct plan over a regular plan. So all the checklists that I just discussed in this video are made from this main sheet. This is the main sheet from which I have made all the ratios. You can download this sheet from the description box given below, and also do check this sheet for your reference. And also don't blindly invest in any of the funds. Do your own research by downloading this sheet and also from other sources which you have, and then only invest in the funds that are discussed in this video. And this video is for educational purposes, not an investment advice. Now without wasting any time, let's discuss the best multi/flexi cap fund for the year 2025. So the best Flexi/multi cap fund for the year 2025 is Parag Parekh Flexi Cap Fund Direct Growth. But you can choose any of the top 5 funds that I just discussed in this video. It is marked here. The funds names are JM Flexi Cap Fund Direct Growth, Parag Parekh Flexi Cap Fund Direct Growth, Nippon India Multi Cap Fund Direct Growth, HDFC Flexi Cap Fund Direct Growth, Invesco India Multi Cap Fund Direct Growth. So you can go with these 5 funds, any of the funds. But for myself and for many of the investors, this Parag Parekh fund will be best for most of the investors, as because all the parameters which I just discussed in this video, all the parameters are running well in this fund. So for my side, I have chosen Parag Parekh Flexi Cap Fund Direct Growth. I hope you found this video helpful. Do like, share and subscribe the channel for more upcoming videos. So see you in the next video. Till then, stay tuned.